Welcome to the WTR Small Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's episode, I'm being joined by my colleague and technology equity research analyst, James Kisner, to discuss his recent initiation of coverage report on C3 AI, NYSE ticker symbol AI. James will also provide an update from the company's latest quarterly results. Good afternoon, James, and thanks for joining us.
Good afternoon, Tim.
James, let's start at 30,000 foot level. For listeners who may only know C3 AI from the ticker or the AI buzz, what does this company actually do, and how should we think about C3's role in the world of artificial intelligence?
Sure, Tim. So the simplest way to think about C3 is that they're the enterprise AI operating layer. So there's been an explosion of powerful foundation models from companies like OpenAI, Anthropic, and Google. We all know those. Those models are amazing, particularly in the lab. But big organizations still have to solve very practical problems, like connecting those models to all their internal data, enforcing security and compliance, making sure you can audit answers, and then turning it all into applications that real people and customers can use. So C3 sits above the cloud providers and the foundation models and helps large organizations do exactly that. They've also got a platform. They also provide a platform and a catalog of pre-built applications, things like predictive maintenance, supply chain optimization, fraud detection, and now a growing suite of generative and agentic AI use cases. So rather than building everything from scratch, a bank or an energy company or a government agency can plug into C3 software and get an industrial strength AI solution that works with the models and cloud infrastructure that they already use.
Great. In your report, you used the phrase platform of platforms, almost comparing C3 to what SAP was for ERP or Salesforce was for CRM. Can you unpack that a bit to include discussing how C3 is differentiated rather than just being another AI tool or model provider?
Sure. So I think what most people see in the world of AI today falls into one of three sort of key buckets. First, it's the chip and infrastructure providers. So NVIDIA and the big cloud hyperscalers and so on. It's the number two foundation model companies. Of course, that's the folks building a very large language or multimodal model. And then there's the point solutions. Startups that are building a single AI powered app for one narrow use case. So C3 is trying to be the standardized layer that glues all of that together for the enterprise. They're not competing with chips or clouds or models. They're orchestrating them. So a manufacturer might run C3 on Microsoft Azure, tap into OpenAI models, and pull data from SAP and various sensors on the factory floor. And C3's platform can handle the data integration, security, workflow, and monitoring while the customer chooses which models they want to use under the hood. So, ultimately they're LLM agnostic and cloud agnostic, and that approach is important because big enterprises are nervous about getting locked into a single AI vendor, and C3 gives them the way to use the best model for each job without rebuilding the stack every time something new comes along.
Great. Give us a little bit of a history on the company, if you would, please, and how did C3 AI get here, and who are some of the key partners and customers that validate what they're doing?
Yeah, so C3 was founded back in 2009 by Tom Siebel. Many listeners may remember that he was the founder of Siebel Systems before it was acquired by Oracle years ago. So the original idea for C3 was very focused on carbon and energy, using data analytics to help utilities reduce emissions. In fact, they were called C3 Energy early on. And they often, over time, they broadened into industrial IoT, or Internet of Things, and then they made the full pivot into enterprise AI and rebranded as C3 AI. So there were a couple kind of major things that helped them get credibility. The first was a landmark alliance with Baker Hughes in energy, which helped them land big oil and gas customers like Shell and ExxonMobil. And the second thing was they had some deep partnerships with Microsoft, AWS, Google Cloud, and global integrators like McKinsey's Quantum Black. So in some cases, those partners actually co-sell C3 software into their own customer bases. So on the customer side, you see large, complex organizations that are serious about AI, global energy majors, big manufacturers and U.S. federal agencies like the Air Force and parts of the intelligence community. So these are not easy wins for a small software company, and they signal that C3 technology is robust enough to handle what we'd call mission critical workloads.
So let's turn our attention for a moment to the numbers. Can you give us some background on C3's financial performance, starting with their fiscal year that ended in April?
Sure. So heading into 2006, in Q4 of 25, they were doing pretty well. They actually put up a pretty strong year. In the year that ended April 2025, revenue grew about 25%. And the company talked a lot about momentum in bookings, especially via partners and in non-energy verticals. And they were talking very positively about the potential of their partnership with Microsoft Azure. And they gave FY26 guidance that implied growth of 20% or so at the midpoint.
And then it sounds like we got a very different story in 1Q26. So what happened and what did you see in the 2Q26 that followed?
Yeah, so Q1 of 26, so fiscal 26 was one of the weakest quarters they've posted as a public company. So revenue came in at about 70 million. That was about 30% below their own initial guidance range, and it was down 19% year on year. Gross margin took a big hit, and they burned a bunch of cash. All the while, they announced that Tom Siebel was moving on and that into the executive chairman role, and they had a new CEO stepping in alongside a major sales and services reorganization. Um, it's not surprising that the combination of a big miss, leadership transition, and go-to-market disruption kind of spooked investors and raised real questions about execution. They just reported the second quarter last week. It looked more stable, but it's not, quote, fixed yet. Revenue was about 75 million. That was basically in line with expectations, and up sequentially, but still down roughly 20% year on year. Actually, a touch worse than Q1 on that metric. So the bright spot was bookings. Total bookings jumped 49% sequentially, with a lot of that momentum coming from larger deals and from federal customers. The trade-off is that mix is skewed towards they're called IPDs, or smaller initial production deployments, and federal projects that are more delivery intensive. So gross margins are under pressure, and management's message was essentially, near-term margins will be squeezed, but these deployments are kind of planting the seeds for larger expansions later. So my takeaway is that demand in the pipeline maybe look healthier than the current revenue line suggests, but they still have to prove that they can turn that into sustained growth and better profitability.
I want to zoom back out for a second, if we may, to the broader AI narrative. With all the hype around generative AI, how does C3 fit into that trend? Are they more of a traditional analytics company, or are they really leaning into Gen AI and these newer agentic approaches?
So they're very much leaning in. So C3, moved quickly to integrate generative AI into their platform. The idea is that you can sit an AI assistant on top of all the structured and unstructured data an organization has, documents, sensor data, and transaction systems, and then use large language models to ask questions in natural language, generate insights, or even trigger workflows. So what C3 differentiates with is that they are making it safe and reliable for the enterprise. So they focus on things like access controls, audit trails, minimizing hallucinations, and being able to point back to the data behind a given answer. They've also talked a lot recently about agentic AI, where you have multiple AI agents collaborating to handle multi-step processes and not just answering single questions. So, it's not just a side project for C3, it's increasingly the front door into their platform.
Having mentioned that the federal government is a C3 customer, how important is that segment, and what does that actually tell us about C3's role in AI?
So federal is really important. It was 20% of FY25 bookings and 45% of bookings in the most recent quarter. And federal is very important for a couple of reasons. I mean, first, the U.S. government is a very large, long duration spender on advanced technology. And when they pick a vendor for, predictive maintenance on an aircraft or healthcare analytics, that can become a multi-year platform relationship. And second, the bar to get into those environments is really high. You have to clear security, compliance, and performance hurdles that most startups just cannot meet. And the fact that C3 has become a meaningful player here is just strong validation of technology. And so, thirdly, federal projects often showcase what AI can do in the most demanding, real-time, mission-critical settings. If you can't keep fighter jets flying or optimize fuel logistics in contested environments, you can probably help a utility or a manufacturer run more efficiently too. So I view federal as both a growth driver and a proof point that C3's platform can handle serious workloads.
And then wrapping up, James, something that personally caught my attention in your initiation of coverage report is that you mentioned that C3 has become a credible acquisition candidate. Walk us through that logic and why do you think that's on the table and who might be the logical acquirer?
All right, to be clear, kind of usual disclaimer here, we're not predicting a deal or saying one is imminent. But when you kind of just look at the combination of strategic assets and the valuation reset, it's reasonable to think about C3 as a potential target. On the asset side, they've spent more than a decade building a hardened enterprise AI platform that's battle tested in complex environments. They've got a broad library of vertical applications across industries like energy, manufacturing, and government, deep relationships with marquee customers and with cloud partners. So for a large tech or cloud company that wants to accelerate its enterprise AI application strategy, acquiring C3 would be a way to fast forward several years. And in terms of logical buyers, you can start with the obvious, or at least what I think is the obvious. Microsoft already has a deep partnership with C3. They invested at the IPO. They're embedding C3 apps into Azure's marketplace and sales motion. So, C3 could help Microsoft round out their industry-specific AI offerings on top of Azure and Copilot. IBM has been leaning into enterprise AI with Watson X and a big consulting footprint. So C3 would give them a package, give them package applications in verticals like energy and defense. Others that might fit would include AWS, Oracle, Salesforce, or ServiceNow, all of which are looking to infuse more AI into their platforms and cloud. So again, none of this is a call that this deal will happen, but when you combine the technology, the customer base, and the current market cap, C3 looks like the kind of asset that could attract a strategic interest.
Well, thank you, James, for those interesting insights on C3 AI, NYSE, ticker symbol AI. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.